Morning everyone, welcome to Ainsley News. What a week in crypto. Far out. The Bitcoin market experienced a week for the history books. Volatility and chaos, with the exchange rate for two stablecoins, UST and USDT, taking centre stage. Over just a few days, the top 10 digital assets by market cap, Luna and UST, erased nearly $40 billion in investor value. UST lost its $1 peg completely, and Luna collapsed to a price of 0.00001 of a dollar with its super highly inflated supply. As a result, the Luna Foundation Guard, or LFG, deployed their only recently established reserves of around 80,000 Bitcoin to defend the peg, although without success. Later in the week, and on the momentum of UST depegging news, the market temporarily expressed fear over the quality of Tether's peg. Yep, what a surprise. USDT traded briefly down to a low of around 95 cents, however, recovered within 24 hours, currently trading at a very slight discount of 99.8 cents. Amidst the stablecoin contagion and under the weight of $3.275 billion worth of Bitcoin sold by the LFG, Bitcoin traded down 21.2%. to $26,513. This is the lowest price since December 2020 and naturally puts much of the market under financial stress. So what exactly happened to Luna? Over the past few years, the market has seen stablecoins rise to represent a sizable portion of the total market cap of all digital assets. On the 8th of May, stablecoins captured more than $135 billion in value between USDT, USDC, BUSD, DAI, and UST. Stablecoins come in several forms but can generally be represented in three types: collateralized, crypto over collateralized, and algorithmic. In the case of UST and Luna, the algorithmic design allowed for users to convert one UST into $1 worth of Luna, and vice versa, irrespective of the market price of both assets. In effect, this means that the Luna supply contracts and price often rises when there is demand for UST. However, this same reflexivity works in reverse. When demand falls and price moves to the downside, the supply of Luna can, and did, hyperinflate. UST peg began to break on the 9th of May when Luna was trading around $60. That's about 50% off the all-time high. Over the next 36 hours, Luna prices fell below 10 cents, and the UST peg traded between extremes of 30 cents and 82 cents. This put protocol redemption mechanisms into overdrive, as users both panicked and arbitrage the exchange of one UST for $1 worth of Luna, inflating the supply and depressing prices further. The magnitude of Luna supply inflation can be seen via today's news website, so ainsleybuoyan.com.au. Click on news and you'll be able to see these charts. But in summary, over 1 week, 7.5 billion USD were redeemed, so that's 40% of supply, whilst the Luna supply inflated from 343 million to over 6.5 trillion, an annualized inflation rate of 99,263,840%. That's a big number. At one stage on the 13th of May, the Luna blockchain was even halted as a result of second-order effects on network stability and governance due to hyperinflating supply. As the UST peg traded lower, the Luna Foundation Guard began to deploy their recently acquired Bitcoin reserves. Total reserves had built up to around 80,000 Bitcoin in recent months, largest acquisitions made between the 21st of March and 5th of May. The total realised value of their holdings, with coins valued at the time they were added to the wallet, was $3.275 billion. This resulted in aggressive selling pressure on BTC. The LFG Bitcoin balance was emptied in three tranches, as we show today via graphs, but the first tranche deployed around $750 million in value, the second tranche around $916 million in value, and the third and final tranche was $870 million worth of value, thus resulting in their empty wallet 6.5 hours later. A series of equivalently sized exchange inflows occurred between 6:30 on the 9th of May and 1:10 a.m. on the 10th of May, as the coins were moved between custodians by market makers engaged by LFG. Aggregate exchange balances increased by around 88,000 BTC over this period, which is a bit higher than the 80,000 deployed by LFG. This signals that these events triggered a contagion effect and panic as Bitcoin investors added to the sell-side pressure. As the Luna saga unfolded, the coins acquired by LFG were spent on-chain at prices much lower than when they were purchased. With the USDT peg also coming under pressure, prices broke below the $29,000 support level set in July 2021. This put all investors during that cycle into a loss and precipitated a significant and widespread net loss. What happened this week was historic. However, in many ways aligns with the characteristics of a textbook digital asset bear market. It remains to be seen if a full return to the realised price is required to put this bear market to rest, and if so, whether it is for months, weeks, days, or just a short moment. What we do know is that this historic capitulation events have been ideal times to purchase crypto. And also brings up another interesting point. We have our own stable coin built and backed by Ainsley. It's backed by real gold and real silver. We can only issue those tokens if there is real gold and silver held in Reserve Vault and in Melbourne Vault. Great place to park profits if you're looking for a proper stable coin. Consider gold standard and silver standard next time you're trading. And that's news for today. Jump over to ainsleywealth.com.au if you're looking to purchase around this dip. All the large cap cryptocurrencies, buy, sell and exchange. If you're after the physical stuff still, go over to ainsleyBullion.com.au. You can also check out all our news there. And goldsilverstandard.com. That's our cryptocurrency built and backed by real gold and silver. Enjoy your day, everyone. We'll catch you tomorrow for more news.